Good morning. It's Tuesday the 16th of January in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Iowa delivers a resounding win for Donald Trump in his bid for the US Republican presidential nomination.
America and the UK warn commercial vessels to avoid the Red Sea as a merchant ship is hit with a ballistic missile.
And a £200 billion avalanche. We have a special report on the British pension funds gearing up to flood the market with private assets.
Let's start with a roundup of our top stories.
Donald Trump has cruised to victory in the Iowa Republican presidential caucus, with Ron DeSantis finishing a distant second and Nikki Haley third. Ohio entrepreneur Vivek Ramaswamy ended his presidential bid after a disappointing showing. Republican political consultant Rick Davis explains how the nomination race could now unfold for Donald Trump.
If Trump does run the table and gets both Iowa and New Hampshire, a really unusual thing, then he's got 4 weeks to consolidate his hold on South Carolina. And we've seen early polling. The campaign hasn't gotten to South Carolina yet, so it's not reflective of a real campaign. But right now he's 20 points ahead of Nikki Haley, who calls it home. So, and then after that, the really next big thing is Super Tuesday. So he could actually walk into Super Tuesday basically unchallenged at that point.
Bloomberg Politics contributor and partner at Stonecourt Capital, Rick Davis, speaking there. Allies and adversaries around the world are closely watching the 2024 US presidential race, in which Trump and Biden are offering starkly different visions for America's global role. A December Morning Consultant Bloomberg News poll showed Trump leading Biden in the 7 swing states that will likely decide the outcome of the election.
Houthi militants have attacked a US-owned container ship in the Red Sea. The vessel was hit by a ballistic missile but avoided significant damage or injuries to its crew. The attack follows a warning from the US and UK to merchant ships to avoid the area until further notice. The EU Economy Commissioner Paolo Gentiloni sees the potential for global economic fallout from the crisis.
What is happening in the Red Sea is not, for the moment, apparently creating consequences on energy prices and inflation, but we think that it should be monitored very closely because these consequences could materialize in the coming weeks.
Paolo Gentiloni there. The latest attack in the Red Sea comes after American and British forces bombed the Houthis in an effort to deter them from disrupting global shipping.
Prime Minister Rishi Sunak defended those joint airstrikes in Parliament. He told MPs the Houthis' aggression was the biggest attack on the Royal Navy for decades.
I stress that this action was taken in self-defence. It was limited, not escalatory. It was a necessary and proportionate response to a direct threat to UK vessels and therefore to the UK itself.
Rishi Sunak added that he hopes the airstrikes would de-escalate the conflict. However, the world's largest shipping association, BIMCO, is warning disruption in the area could last for some time. The number of ships passing through the southern Red Sea since Friday has fallen by more than half compared to the corresponding period a month earlier.
Iran has launched missile strikes against targets in northern Iraq and Syria. Bloomberg's Dan Schwartzman has the details.
4 people were killed and 6 others wounded in an Iranian missile attack in the northern Iraqi city of Erbil. The Iranian Revolutionary Guard Corps has taken responsibility for the strike. The state-run Islamic Republic news agency says the Revolutionary Guard launched ballistic missiles on the, quote, espionage bases of anti-Iranian terrorist groups in Iraq and Syria. In a statement, the IRGC says the strike was in response to recent targeted killings in the country. No American or coalition forces stationed in Iraq and Syria were injured in the missile strikes. The U.S. also shot down 3 drones near Erbil Airport. Dan Schwartzman, Bloomberg Radio.
UK inflation will drop to 1.5% in May, according to a forecast from ING. The bank's view is that easing pressure from food and energy bills could pave the way for the Bank of England to cut interest rates sooner. Bloomberg's James Wilcock has more.
The consensus view among economists has inflation falling to 2.1% in mid-2025. ING's James Smith thinks it will hit 1.5% in just 4 months. He predicts falls and price rises in nearly every major component, and gas prices will bring the Bank of England under target by May. If correct, the data could be a boost to Rishi Sunak, who has staked political capital on bringing inflation under control. In London, James Wilcock, Bloomberg Radio.
Apple will remove the blood oxygen feature on its smartwatches to avoid a US ban if an appeal fails. The International Trade Commission ruled in October that Apple's devices violate the patents of medical equipment maker Masimo. Bloomberg's Mark Gurman says that Apple's challenge against that decision will be crucial in giving the company more time to find a solution.
Well, if it's not immediate removal, Apple's going to have about a year to figure out a solution. And I would bet heavily that with a year's time, Apple would be able to retain the feature on the watch indefinitely and rework it to not have to violate Masimo's patents. In fact, I've been told that they're working on this software fix that changes some of the underlying algorithms, some of the wording inside the blood oxygen saturation app to get that to happen. But for that to matter at all, it's really important for Apple that they win tomorrow. They win that appeal.
Bloomberg's chief correspondent Mark Gurman there. Apple has increasingly used health and safety features to market its smart watches, helping to turn the line into a $17 billion business for the tech giant.
Elon Musk says he's uncomfortable growing Tesla's AI capacity without a larger share of voting control. The automaker is currently investing more than $1 billion into its Dojo supercomputer project and is working to develop humanoid robots. However, in a post on his social platform X, the entrepreneur said that without owning 25% of Tesla stock, he would prefer to develop products independently. According to data compiled by Bloomberg, Musk currently owns more than 12% of the company.
And those are your top stories on the markets this hour. The MSCI Asia Pacific Index is down by 1.3%. Looking at stock futures for Europe, also declining 0.6% lower. And 10-year US Treasury yields up by close to 6 basis points, now trading just a notch above 4%.
In a moment, we'll tell you why British pension funds are gearing up to flood the market with asset sales. But one of the things that caught my eye from the coverage of Davos this morning, and it's one of the things that I like about Davos because it does get you a chance to get an insight into some of the workplace trends that are happening. And there's conversation that the chair of PwC in the UK has been having about how the rise of AI actually means that more junior staff should spend more time in the office. His logic is that a lot of the tasks that people used to get trained up on are now being taken over by the technology.
Yes.
Which means face-to-face time is even more important. He says it could actually to help people accelerate them up the career ladder if they're spending more time in the office, meeting people, interacting with people. And he says that you need to be in the office 4 to 5 days a week if you want to succeed in your career, which I'm quite sure plenty of people would disagree with.
Yeah, OK, but very interesting advice, perhaps for younger people in the office, that you need that face time, that learning time. I mean, interesting if you get paid more sooner in your career. That's the upside,
here's the crux of it. Yeah, people might be interested in if they get that sort of motivation. Let's get more now, though, on the US political story this morning. Donald Trump has won the first Republican Party caucus at the campaign in Iowa. Our executive editor for US government, Michael Shepard, joins us now from Iowa for more. Michael, great to have you with us on the programme. So the polls have predicted Donald Trump would win big. He did. Were there any surprises in his vote?
Well, Stephen, thank you for having me. Our team is still hard at work parsing the results and figuring out what's going to come next. As for surprises, look, results in any election are always a surprise, as polls can sometimes get it wrong ahead of time. And in tonight's caucuses, it was unclear beforehand just how much support Donald Trump would get. Iowa voters are famously independent-minded, but he did end up with 51% of votes from caucus goers, and that's even more than the support that was projected in the final poll of a authoritative local newspaper taken days before tonight's caucuses.
OK, so that for Donald Trump. What about Ron DeSantis, who came in second? What does it mean for his campaign and indeed for Nikki Haley?
Well, let's start with Ron DeSantis. And that's a good question, Caroline. I'm glad you asked that about him, because for Ron DeSantis, this is a vindication of his all-out bet on Iowa. He really banked on trying to win the Hawkeye state. He spent so much time in the months ahead of the caucuses He visited all 99 counties in the state, crisscrossing, visiting so many different voters. He set up an extensive ground operation. He brought in allies from Florida by the busload and plane load to go door to door days before the caucuses in freezing cold temperatures. So it showed some motivation and actually had some effect. Now, for Nikki Haley, look, the last thing she needed heading into New Hampshire, where she has bet big as a stepping stone to her home state of South Carolina, the last thing she needed was a third-place finish. She had hoped to do well enough to Iowa to really use it as a launching pad into New Hampshire and then South Carolina, but it didn't work out exactly as she had hoped. And that last poll I just mentioned, taken days before the vote, had actually shown her finishing ahead of DeSantis here.
And the field already narrowing after this caucus, Vivek Ramaswamy dropping out of the race. What went wrong for his campaign?
Well, Vivek Ramaswamy never really caught fire with more than just the segment that he really appealed to, the very independent-minded and even more libertarian voters. And in places like Iowa and South Carolina, it was hard for him to fit in. His message just didn't take hold. And he, in essence, sort of acknowledged that during his speech. He said in the campaign, his speech tonight endorsing Trump, he said, in tonight's race, there are two America First candidates. Now there's only one with me leaving. And that, of course, is pointing to Donald Trump. So he was signaling that many of the positions that he was espousing were already ones that were reflected by Trump. And he has now thrown his support for the former president.
OK. Just lastly and briefly, then, the key things to watch out for next as we move towards the New Hampshire primary that takes place next week.
Well, this is really crucial for the DeSantis campaign to make the most of New Hampshire, where they haven't invested nearly as much time as Nikki Haley has. She has the endorsement of the governor there, who's been campaigning very aggressively in the Granite State for her. She also enters that state, DeSantis does too, facing a very different electorate. It's not nearly as conservative as Iowa, so we could see a different result. It could pivot and actually leave Nikki Haley ahead of Ron DeSantis, but behind Trump. But we'll have to see there. Trump is seeking to turn his absolute majority win tonight into something that will allow him to pivot sooner to this general election matchup with Joe Biden in November.
OK, things heating up on that front as well. Our executive editor for US Government, Michael Shepard, great to have you with us from Iowa this morning as we parse the results of that first Republican caucus.
Now let's turn our attention to the UK, because British pension funds, which were at the heart of the gilt market crisis some 16 months ago, are now gearing up to flood the market with billions of pounds of private assets. Joining us now for more is Bloomberg's asset management reporter, Lucia Giftopoulou. Lucia, welcome back to Bloomberg Radio with this really interesting story. Why are these funds selling these assets now?
Well, these are defined pension funds, defined benefit pension funds, which guarantee the retirees a set amount every month for their entire retirement. Because interest rates are higher now, they've reached a stage where they can guarantee the pensions of current and future retirees for the rest of their lives. And when they get to this stage, they can make a deal with an insurer, pass on the risk to insurer, the insurer writes the checks from now on, and they can get this stuff of the books of the employer for whom the scheme is managed. So because interest rates are higher now, they're in a position where they can get a deal with an insurer. And many of them are wanting to jump on this opportunity and take the risk of the company's balance sheet.
So what's the scale of this sale then, Lucia? How much are we talking about in private assets?
Well, defined benefit schemes are manage 1.4 trillion in total. 1 trillion of them is closed, which means that when they reach a good funding level, they can make a deal with an insurer, and about 14 to 20% of that is in private assets. So it could be as much as 200 billion that would come into the market over the next few years. That was originally expected to happen over 2 decades, but because interest rates have shot up, the time period has shrunk, and many of them are even ready now to do this deal. But the insurers want a very liquid portfolio with no liquid assets on it. So they would need to have cash, government bonds, corporate credit, that type of portfolio. And this is why they want to get rid of the private assets, to get the portfolio ready to make a deal with an insurer.
That's interesting. So is it also part then of a wider trend in terms of defined benefit pension funds in the UK?
It is, because, again, of the higher interest rates and many of them being in a position to say, you know, we can do this, we can insure the pensions, we can pass the risk to the insurer is responsible for this from now on. Many of the companies for whom the schemes are managed, they're just saying, okay, let's just do it. Let's do it fast while interest rates are high and we have a good funding position. So they're rushing to do it. And it's a massive transfer of assets, not just the private assets, but, you know, the entire portfolios are shifting from about 5,000 defined benefit pension funds to 8 or 9 insurers. It's a massive change of hands of a certain amount of assets. So this will define quite a few things in the market.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.